everyone. Thank you for joining us once again here at Seafried and Brew. I am Jamie Sumner, Chief Analyst, and for this week's webcast, we want to review over the first quarter results for the National Community Bank benchmark. So what that benchmark comprises would be those banks that are between the asset sizes of $100 million and $5 billion. And when we look at the community banks, we like to look at those banks that are stock trading. So they have stock. They're not mutual institutions, but stock institutions. So let's go ahead and take a look at the overall return on assets for the first quarter 2017. So return on assets, we can see, came in at 0.83. So no real change from where it was back in the fourth quarter, and a little higher, just 1 basis point from where it was a year ago. But we did have some volatility in here where we reached up to the 88 basis points back in the third quarter of 2016. So we had some volatility, but overall a pretty steady operating return on average assets. When we look at net interest margin, which would be almost the primary driver of return on average assets, we can see here the net interest margin kind of came down over the past 4 quarters. Right now, for the first quarter, the net interest margin is at a 3.69, down from where it was in the fourth quarter at a 3.72. Similarly, back in the first quarter of 2016 at 3.72. So we had this downward trend here coming after that third quarter result, coming in at 3.74 for 2016. So when we have this come down, the question is, why did we see the overall level of net interest margin peter out within the first quarter? Well, overall, we see the asset yields. The asset yields peaked out at 4.10 for the third quarter and then made its way down to a 4.05. So 405 basis points. So we've moved down 5 basis points from the high, 2 basis points from where we were back in the first quarter of 2016 at that 4.07. So asset yields have come down a little bit. We look at the cost of funds. While there is some volatility, it looks like we've got to look at the overall scale. So this is only going from a 0.462 to a 0.482, so only 2 basis point scale. So when you look at it, basically it's remained unchanged in here. So the cost of funds steadily keeping at that 0.47, 0.48 range in here. So this is where we're keeping our eye on with the Fed increasing their rates. The question is how is that going to impact the overall cost of funds, looking out into the end of 2017 and then into 2018. Looking beyond this net interest margin and its components, let's look at net overhead. Net overhead kind of volatile over the past year. In here, first quarter at a 2.11%. So this is over average assets. Now recall, when we look at net overhead, that's the difference between non-interest expense and non-interest income. Another way to look at this type of efficiency ratio would be look at the efficiency ratio. And for the first quarter, we come in at 67.6, down a little bit from the 68.56 in the fourth quarter. So basically what we're saying is that for every dollar in revenue that we're generating, we're paying out 67 cents inside of expenses. So the lower the better. And we've been overall on a downward trend in here, which is what we want to see. And then we look at the overall risk aspect of this benchmark group. And you can see this is based off of the total risk index here at Seafried and Brew. Kind of steady. We were at 43.11 on our score back in the first quarter of 2016. For 2017, we're at a 42.20. So we're at the lower end of this moderate range. This would be low risk in here for this green area, and then this would be the moderate risk. So we're right on the cusp of between moderate and low risk. What we like to see are banks staying below this 50 mark in here. So we like to see banks below that. That's what we have for you today. This week I'm traveling down to San Antonio for the Texas Bankers Association annual convention. So if you happen to find yourself there, come see me. I'll be at booth 304. That's 304 with the investment professionals down there. So hope to see you there. Have a great week.